Mic check 1 2 1 2. Mic check 1 2 1 2. All right, let's get it, baby. So everybody, let's talk about it. First thing on the list is, what are we going over? We are gonna go over the quiz from the options class part 1. Right? We'll talk about all of this other stuff, but first let's go over quiz from options class number 1. Let's do it. Let's do it. Let's do it. So options class number 1. If you don't know what I'm talking about, it's on the Discord, right? It's on the Discord. All right, so submit another response. Let's do it. So if you are on the Discord, you will see this. We're going to do this right now. Where am I? I'm right here, baby. Let's get it. Mic check 1 2 1 2. You should be able to hear me. You should be able to hear me just fine. Okay, if you are not on the Discord, the link is in the top of the chat. We're going to do the regular live, but first we're going to do this. So let's go over from the top. So quiz 1. You should have already seen part 1 on the Discord server. Part 1, the lesson 1, you should have already taken the quiz. If you can't, you already know what time it is. So now, here we go. How do you start quiz class 1? And it's accompanied by this video. All right, so KGM, right? Put in your email. What is your Discord username? I am at Kenan Grace. That's me. Okay, so now, first question is, do you understand? And remember, everyone who has already done this, you already know what time it is, but now somebody said they got a 15 out of 20, but let's get it. Let's get it. Let's make it make sense, right? Headphones in the chat. So first, do you understand that options run the risk of losing 100% of your investment if mismanaged? If you want to be up on the options class, family, you would have learned all of this in the lesson, and then we do a quiz, because I'm telling you here right now, I take this so seriously. Teaching you how to fish, teaching you how to understand options so you can run your own plays. I want you to learn how to fish, baby. If you want to get up on the Discord, because I'm not going to keep doing this on live with everybody. This is Discord particular stuff, right? So let's go over the quiz. And again, if you've never seen any of this, it's because you're not in the Discord and you didn't watch the lesson. But now people took the quiz. It's 3 parts. You go over the lesson, then you go over the quiz. And then we do the review of the quiz. And this is the part 3, the review of the quiz. All right, so now, do you understand that options run the risk of losing 100% of your investment if mismanaged? Remember, if you mismanage your option, then it runs the risk of losing all of it. Okay, so now, boom. We understand that, yes. So, if you've seen the video, it says, what was the strike of the water bottles in the example in the video? Now, this is the check that you did the lesson. So, basically, it was $2. So, the example was, if you have water bottles, right? And you wouldn't pay, and I want you to really think about how this is, right? Think about this. Plastic water bottles. A case. Plastic water bottles. So let's see. If you were to buy this case of water bottles, right? You might pay $1 per water bottle. But what if someone comes to you and they say, look, I'm going to give you a contract that says up until October 15th or whatever day, you can sell these, or actually you can buy these for $2 no matter what they cost. No matter what they cost, right? You could buy them for $2. So then somebody's going to sell you that contract for really, really cheap, saying that you can buy them for $2. Why? Because the water bottles aren't even worth $2. So they're trying to get rid of this contract, right? So then you now have a contract saying you could buy these water bottles, each one of them, for $2. Now, you know something that the person who sold you the contract doesn't know. You know that, let's say a pandemic is about to happen and then water bottles are about to become crazy expensive, right? So when they gave you the contract saying that you can buy them for $2, what does that mean? That means that, you know what? You anticipate it's going to go up, the price of the water bottles. So next thing you know, pandemic happens, water bottles all cost $10 a piece. But you have a contract that says you can buy it for $2. That's the strike price, right? That's the strike price. So when we go to our quiz, what is the strike? In the water bottle example, it's $2. So why do people buy call options? Why do people buy call options in the first place? And again, we need 50% likes. Hit the like button on your way in, family. 50% likes. Why do people buy call options? Is it to make money as the stock trades sideways? No, it's not. When the stock trades sideways, you lose money. Is it to make money as the stock drops down? If you buy a call and the stock goes down, you are going to lose money. Now, is it to make money as the stock goes up? Oh, yeah. When you get into a call option and you buy a call option, what happens, family? you are ready to take the slingshot straight to the promised land. When you think a stock is going to go up and you know what you're doing, you buy a call, right? So to make money as the stock goes up, and again, not financial advice, but this is how it works. Now, the call option highlighted in blue would be considered what? What would we consider this? So let's take a look. We have our price of the share, right? And let's make this bigger so you can see it. We have our share price. Now, what stock is this? This is BNGO, and we're going to buy a call option, BNGO. So now, if the stock price is currently $5.19, our strike price is 7 up here. What do we consider this? So let's look at our options. Is this in the money? Is this an in the money call option? No, right? When you have a call, in the money means basically all of these numbers that are lower than the current price. So if the current price is $5.19, that means 5 is considered in the money. That means 4 is considered in the money. But that would mean that 6 is considered out of the money. 7 is considered out of the money. Okay, so now, where is this blue one? Is it in the money, lower than the price, in call options, or out of the money? Okay, up here. Now, the reason it's considered out of the money is this. If this thing expires and the stock price has not risen above 7, like it's $5.19, if it expires and you have a contract saying you can buy it for 7, why would you buy it for 7 when you can buy it for 5? So then this thing would be worthless, totally worthless. But if this goes up to 6, if it goes up to 7, if it goes up to 8, what if the share price goes all the way to 1,000,000 or even 100? And you have a contract saying that you can buy it for 7, that would be in the money now. You see what I'm saying? So now that $7, when the share price is 5, when you buy a call, it's out of the money. Which of the following numbers is a strike price? So now this question is particularly about the $6 call. Take a look at this. Is 0.04 a strike price? Is 6.04 a strike price? Is 16.38% a strike price? Or is $6 a strike price? So let's look. It's talking about this one. Which one of these, all of these numbers, is a strike price? This is the break-even price. This is the break-even percent. This is the premium amount. This is the strike. So it's $6. It's $6. And again, family, I'm telling you this. I'm here to teach you how to fish. I'm here to teach you, and I want you to understand when you see these things on your own and whoever you get options from or whatever, and they charging you $100 million, no, we not doing that. I want you to learn, and I want you to get a lot of value from this. I really take this seriously, and I want my actions to speak louder than my words. That's why I take the time to show you how to do stuff like this, and I don't charge you $1 million to do it. But here we go. Which of the following is out of the money, right? Which one is an out of the money strike price? So remember, we have our price right here, right? Our price of the stock is right here. Which of these numbers is out of the money? Is 7? So we already know that we're looking for strike prices, right? The key here is out of the money, but also strike price. So all of these break evens and premiums, none of that stuff is a strike price. It's going to be 8, 7, 6, 5, 4, or 3. Okay, so let's look at our answers. We don't even have the other ones. We only have 3 and we have 7, right, of strike prices. We know this percent is not a strike. We know this is not a strike. So it's going to be 3 or 7. So now let's see what the question is asking us. Which of the following is out of the money? Out of the money means it doesn't have worth yet, right? It doesn't have that intrinsic worth just yet, right? Now look at this. $7 is out of the money, meaning if we expire today, right, at $5.19, this thing is going to be worthless if we were to expire today. So then $7 is out of the money. Which of the following is an in the money strike price? So remember, if we're buying a call, in the money means it's basically lower than this. It's lower than the current strike price or the current share price, So which one of these is in the money? So let's look at the options. We know this is not a strike. We know this is not a strike. This is a strike and this is a strike. So 3 is a strike and 6 is a strike. Which one of them is in the money? Is 6 in the money? No, because 6, the share price has not gotten there yet. But 3, it's already over that. So 3 is in the money. $3 is an in the money call option. Notice, in the money call options, the deeper in the money you go, the more they cost. The further out of the money you go, it gets cheaper. It gets cheaper. So now, somebody said 5. You're right. But 5 is just not one of the options given. So now, can you sell an option before the expiration date? Absolutely. You can sell an option immediately. If you sell it within the same 24-hour time frame, then that means that you're going to have a day trade. If you can day trade, I want you to be cognizant of that. If you can day trade, then that's fine. You can get out immediately. But you can hold it all the way out until the expiration. And if you hold it until the expiration and it's out of the money, it's going to be worth a big donut, zero. You want it to go in the money. Now, what does break-even price tell you in a call option? So you look at this. We have our strike, $8 call. Our break-even price is here, 802. Our break-even percent is it needs to go up 54%, basically by expiration to make money. So let's see. Answer A, the dollar amount that needs to be surpassed in order to make money by expiration. And that's right. So take a look at this. This break-even, if we hold this call option until October 5th, until October 15th, we needed to, and this is our expiration date, we would need it to pass this 802, the dollar amount that needs to be surpassed in order to make money by expiration. So if we didn't beat this, then we're not going to make money by expiration. But again, if you get out way before expiration, you don't need to worry about hitting that mark, only if you hold until this expiration. Next, what does the break-even percent tell you in a call option? So the break-even percent, so look, this is the break-even amount. With the current share price at about $5.19, we buy an $8 call, let's say. We would need this thing to go up $8 or go up to $8.02 and past it if we hold it till the expiration date. Now, these and this, the break-even price and break-even percent, they are a pair. They're peanut butter and jelly. They're telling you basically these things go together, right? So the break-even percent tells you, you expect this thing, if you want to hold it all the way to expiration, which we generally do not, if you want to hold it all the way to that day, you need it to go up 54.53%. So it's this. It's the percent that needs to be surpassed in order to make money by the expiration. But remember, we like to get out long before that. Now, how many BNGO calls for October 15th were already picked up before you got here? So I give you a hint. The hint. It's either the volume or the open interest. Let's look at the question again. How many BNGO $7 calls, that's this, the BNGO $7 call for 1015, were already picked up before you got here, right? So take a look at this. The volume is 296. This is how many were traded today. The open interest, this is how many of these contracts are already out in the world. People already picked them up. So then the answer is how many of these contracts are basically picked up before you got here? 11,790. That's our answer. So then it's this, 11,790. All right. How many times was this contract traded today? How many times was it traded today? 296. This is the volume. How many were bought and sold? Add it all up, that number, 296. That's how many were traded today. So then our answer is 296. Now, people are trying to buy this contract for 1 cent. How many contracts are they trying to buy? So when you look at the bid, these are all of the buyers. The bids are all of the buyers. Hit that like button, family. Let's get it to 50% likes. Let me know if we got 50% likes. I think that's like, what, 700? So now, all of the buyers that's here, they're trying to pick up 202 contracts. So then our answer, 202. Let me just double check. People are trying to buy this contract. How many contracts are they trying to buy? Yes. So people are trying to sell this contract for 2 cents. So they're trying to buy it over here for 1 cent, and they're trying to sell it over here for 2 cents. How many people are trying to sell, or how many contracts are they trying to sell? Take a look at this. 173 is the ask. These are the sellers. They're trying to sell 173. So then our answer, how many are they trying to sell? 173. So now, if you buy one share, and this is the trick question. I did this yesterday on the Discord. This one tricked me out, my own trick question, right? So here we go. If you buy one share of the SPY for $437.39, right? $437.39. And the share price increases by $1. So you buy it for this price, and it increases by $1. How much will you have gained on the share? How much will you have gained on the share? You understand me? So now let's see this. You will have gained $1. You'll have gained $1. If it goes up, and the trick question was this, will it go up to 438? 39, yes, it will go to this price, but that's not the question. The question is how much will it have gained? And it would have gained $1. So now let's see this. If you purchased the call option, now remember, this is the key to call options. If you didn't understand anything, I want you to understand this. Headphones in the chat, baby, headphones in the chat. If you buy this stock and it goes up $1, you make $1. But if you buy an option, if you purchase this call option, the 438 call option, and the share price goes up by $1, how much money do you make? And then the hint is the Greeks. So when you go look at the Greeks, it's delta. You move delta, it's delta, and it's this. 1, 2. Delta times 100. So you'll make $48. If you buy the stock, and I'm telling you, you got to have a strong foundation. You got to buy the stocks. But when you're playing the option, you're playing a way to make a lot of money quickly, right? So if you're playing the Greeks, right, because you have to when you're playing options, is this. This will move up $48 just with a $1 stock increase. Your option price is going to move up $48. So instead of making the $1 gain, you'll make $48 on that gain. So here we go. It's 48.92, which is delta times 100. So now, when you buy a call option, delta tells you what? When you buy a call option, delta tells you what? And it's how much money the option will gain if the underlying stock moves up by $1. What do I mean by underlying stock? If you buy an Apple call, Apple is the underlying stock. If you buy a BNGO call, BNGO is the underlying stock. If the underlying stock, if you buy SPY, SPY is the underlying share, right? So if you buy SPY or whatever you buy, and the question is this. When you buy a call option, delta tells you what? And the answer is A. How much money the option will gain if the underlying stock moves up by $1. So if it moves up $1, then boom, you're going to make $48.92. We'll get into the Greeks. That's going to be options class 3. If you want to get into the Discord, because I'm not going to be doing this on live like this for everybody, I'm going to be doing it just Discord. So hit the link in the top of the chat so you can see all of the rest of the lessons as they come out. So now, when you buy a call option, theta tells you what? I want you to remember, they call it the theta gator, baby. The theta gator. Why? Because it's eating away at your gains over time. So theta is another Greek. So we just talked about delta. This is theta. Notice, let's compare delta to theta. This is a really high risk option, the one that we're looking at right now. This SPY, it was basically a one-day play, right? For basically 10-11. This is a really high risk option. How do you know it's a really high risk option? Hit that like button, family. Hit that like button. How do you know it's a high risk option? Look at this. Look at delta and compare it to theta. You want delta to at least be 10 times higher than theta if you plan on holding this more than, I would say, 3 days. If you plan on holding this for 3 days, you want delta to be at least 10 times higher than theta. But if you're getting in and getting out, then this tells you, look, if it goes up $1, if the underlying stock goes up by $1, then guess what? We're going to go up $48. But if we keep this for 1 day, if we hold on to this thing for 1 day, we're going to lose $30 per contract. So now take a look at this. How much money you will gain? No, theta is about losing money per day. So it's down here. How much your option will decrease in value per day at the start, at the very start, because it'll ramp up and theta will be very, very high the closer you get to expiration. And notice this day passed. So theta was really, really high because it was about to expire. So again, theta, how much your option will decrease in value per day when you buy it. But again, it'll ramp up and go even higher. So now, here we go. Go to learn options in the chat on the Discord for discussion. So then we got our learn options session, right? Our options class for beginners. If you want to be in the classes as they go, then hit the Discord link in the top of the chat. You already know what time it is. And then the learn options chat, this is where you can ask me all kinds of questions about it and ask everybody else. So then you click done. So now what I'm going to do, nobody's perfect. I'm going to click submit and we're going to see what my grade is, right? Because if I click the wrong button somewhere, I'll just explain it out of the way. So let's see what we got. So traffic sign. Okay, let's see if I'm a robot or not. All right, here we go again. This isn't done. Okay, let's view our score. Look at this. 20 out of 20. 20 out of 20 right here. So this is my score. The average score or so was about, the average score was about 16. If you are in the Discord, I want you, and you didn't get an A on it at least, right? I want you to go and take it again. If you didn't do that, go take it again. Quiz 2 is coming out soon. And then the quiz 2 review will be out soon too. All of this stuff is Discord only stuff, family. All of it is Discord only stuff. So what I'm going to do, family, and I appreciate you. Shout out to Brandy. Shout out to everybody like that. Is I'm going to cut this live off. And then I'm going to restart a new live. You can jump in on that because I want this one to just be captured on the Discord with only talking about this option quiz review. So, family, I love y'all. I see you in like 5 to 10 minutes or so. I'm just going to set the new live up and then we're going to get in on that. But I'll see you in the next one, which should be very, very soon. Hit the like button. Hit the like button on your way out. And then get ready to jump over to the next one. Take care.